welcome out to our new series. Listen, we've been doing this a couple weeks now. We've been having a Wednesday night YouTube show for a while, but we've been doing trading picks with our coaches here at Tackle Trading the last couple weeks, and the response has been so overwhelming. We have created a new little brand, and this is our new first inaugural show, our first premiere show of the new Trade Masters Wednesday night program, brought to you by Tackle Trading. So Trade Masters, and I can't think of two finer gentlemen to be with me than Tyler Craig from Happy Valley and Gino from whatever they're calling the state of California these days. You know, so gentlemen,
I believe the phrase, Mark, is a bleep show.
Well, Gino spends half of every meeting he's with complaining about California. You know, he's lived there.
The Book of Exodus, man. That's what it's on here. You know,
all
the big companies leaving.
Everyone Tackle Trading knows I am not one for pleasantries. I am one for action and to get into it. And so what we're going to do on our little show tonight is a similar format to what we've done the last couple weeks. It's kind of, think of it as like dueling piano bars, where I have two trade artists, two experienced traders with at least 15 years of trading experience, and they're bringing me and all of you fine folks out there trade ideas, investing ideas, trade setups, ideas. And so think of it as a little dueling piano bar on a Wednesday night. And I'm going to start in my good friend from Happy Valley, Tyler Craig. Tyler, what do you got for us?
You know, I'm bringing the heat. I told Gino I'm bringing the heat. So I've got a nice collection, an assortment, an array of different picks. I think I'm going to try to appeal to everybody here. Got a little bit of momentum, hot stocks. I got a little bit of cash flow. I got a little bit of directional plays. I'm going to start with a hot stock, a momentum play. How about Palantir? PLTR is the ticker. IPOs have been hot. Palantir's gone bonkers after its IPO. And it's got just a lovely little consolidation pattern here. I'm going to call this a symmetrical triangle. I like how it's been resting. I mean, look, this thing rips. It went from $8 to 33, got a little worn out, was deserving of a rest. Rather than getting massively punched, rather than having a huge correction, we have formed a benign symmetrical triangle. I like the digestion here. I like the volatility compression, right? The range is squeezing lower, and volume, Mark, has been receding, showing that there aren't any major selling, let's say sellers, or there's no major distribution. So this is healthy consolidation on a super strong stock in a really strong market. I think it resolves itself higher. I like bullish plays in Palantir. I think you could do a stock trade. I think if you want a cash flow play, they'll let you sell naked puts way out of the money. I think you could sell naked puts and buy the stock. If you wanted a short-term directional play to complement your cash flow, I like every single one of those.
Well, listen, you're not going to have this. That's like playing Prince for me on a Friday night, because I have been recommending Palantir as one of my favorite cost average down strategies out there for the last 6 weeks. So you're not, hey, go look at the trade tab. Let me go look at some far out options here. What can I get for some naked puts?
Yeah, so this is one of the beautiful things about, I think there's a couple things working in your favor. Number one, this is a $26 stock. It's not a $300 stock. So it's a cheap stock, which immediately makes it appealing for a cash flow play like a naked put, like a covered call. It even makes stock trades easier because it's so cheap. That's working to your advantage. The other thing working to your advantage is it has implied volatility through the roof. So if you take a look at the implied volatility, you're going to see that it is quite high. Let me pop that up for us here. All right, so the implied volatility is 104%. By comparison, the S&P is at 22%. So you're getting an implied volatility that's 5 times higher, 5x the S&P 500. And so naturally the premiums are going to be juiced. And then on top of that, you have beautiful technicals. And it's quite liquid. Look, this has not been around for that long, 2-3 months. And look at the bid-ask spreads in these options. I mean, I got a 2-penny spread.
Tight.
It's the open interest is huge. So super easy. You sell a 13 delta put down at the 20 strike, you're getting $53. Your margin requirement is 200. How's about a 25% return on initial margin with a probability of profit of about 87%? Those are sexy trade metrics. Those are sexy.
Those are sexy. And the one thing I love about Palantir is I love it from a because I think this company has some juice. I think it has some long-term. I'm willing to add more if it goes down further. So I like that 20. I like some of those further out date options as well. But listen, like I said, this is Prince on a Friday night to me. Beautiful chart, beautiful setup.
It's on a Friday night.
Beautiful company. All right, Gino, you're up next. What do you got for us? I love that one.
Well, I'm going to talk about a trade, that disclosure that I been triggered in on many times, and again on today, and many different strategies. And it's a very versatile trade because this stock, you could do any strategy on it right now. It's what's the symbol here? MSFT. Microsoft. There we go. Yeah.
Never heard of the company
That's
before.
it. Yeah, only the biggest company in the world. Yeah. So basically, the fundamentals of the stock make it not only a position trade, but it's not a big gapper. It's high market cap. It's good for beginners as a stock trade, and it's good for intermediate as an option trade. I actually have no problem doing covered calls with it, but for smaller counts, great pattern for a diagonal calendar. The volatility isn't through the roof, and it is got its fingers in all non-pandemic stuff that's going to be affecting it. So it's one of those steady, easy to chart. Again, good covered call, good naked puts. I can't count how many I've done on this. Credit spreads, directional trades. I'm showing an ATR currently. Do you have an ATR on yours? I'm showing an ATR of 3.5. So you can even do long calls on it, swing trades, what have you. I like the fact that it's not a big gapper, very liquid options for an option trader. I like to stick to the big names when I'm doing options, that if I get a market fill on options, it doesn't burn me because the options trade in pennies. There's not a wide bid-ask spread. Again, a great long-term trade. It's one of Warren Buffett's favorites, but he's not allowed to trade it because he's friends with Bill Gates. But I've traded around this thing and have never been disappointed. Easy to do risk reward. Very basic.
All right, so what's your favorite trade heading into the second half of the month? What is your favorite trade setup on it? I mean, what strategy do you like
calendars
the most?
Diagonal calendars have been working phenomenal. Going out of the money.
Explain the basics of a diagonal calendar.
So if you don't want to buy the stock, you simply buy a call option, and usually you're buying it 2 to 3 months, maybe 4 or 5 months out. And instead of buying the stock, you buy a longer term option, and you can buy that slightly in the money or at the money. And then you go out about a month and sell a call on it, just like you would sell a covered call. Like for this instance here, Mark, there's a little bit of resistance at 228. So I can sell the 230 call, bring in about, and I'm going about a month out when I sell calls, sometimes less. What I like about Microsoft and the price, I could go 3 weeks out and get a decent premium, let alone not even a month. So like get faster theta, more cash flow. But if I could get $2 3 weeks out or a month, I'm getting about $275. That's $275.
All right, so now diagonal calendars have been working really, really well in big tech for the last 5 months.
Yeah.
What option would I buy? How far out in time would you go?
Well, that's the thing. If you want to keep it cheaper, you could go 3 months or 4. Right now, if you go 4 months, you're looking about.
So what are those April at the money options going for?
April, I'm looking at right now about 17.5. About 17. Are you setting this trade up? You taking it? Okay.
Yeah, I'm building it for you.
All right.
All right. So if I buy, because I always, whenever I do diagonals, I like to think of worst case scenario. Let's say the stock just erupts in the next month and goes clear, like up 10%, right? in that worst case scenario, am I going to get hurt by the short call? And the math here, it doesn't look like I am, right?
No.
The math here looks like doesn't look like I'd make any money in that situation.
Well, if you hit the first resistance at 230, what are you showing as profit today? You're showing 250. A week out, max profit. What are you showing? I'm showing on my setup, I'm showing about a $350 profit in the near term. Max profit about 780. Not too shabby on a risk of just over 2,000. So we're talking about 35% return. Now, diagonal calendars, you're going to get about 30 to 40% return max on normal, but you're playing time decay. You're playing time decay. Now, like I said, I love theta plays, but Mark, if you want this trade to be cheaper, you can do a vertical spread. It's much cheaper. You know, just your basic vertical. And if you're a position trader, you buy the stock and do covered calls. It's very, very flexible. So for my favorite pick of the day, I like something that appeals to any style of trader.
All right. Tyler, you're up next.
Hey, for what it's worth, Microsoft was on my list as well, so good pick, Gino.
Oh, sure it was. Okay.
Don't make me copy
And so is
paste all
Taiwan
16 of these.
and so is Taiwan Semiconductor, right?
Actually, no, I didn't have that one. You can have that one.
Okay.
All right, but my next one, I'm going to go back to the momentum crowd. I was feeling good about that Palantir. So this one is just going to be a stock play. Just going to be a stock play. APPN Corporation. The thing's on fire. It just went from $60 to $216. Pulled back. It's now settling in. You got a little mini-me consolidation pattern here. I like the bullish hammer candle today. I like this as just a swing trade. Now, this is maybe a little volatile. I mean, I don't need to say maybe. This is volatile. This would be the type of stock I would consider if I was an aggressive swing trader. I wouldn't dabble with options in this one. It's too volatile, and I don't think they're that liquid. But if you think that the likes of the Palantirs of the world and these hot momentum stocks run, I like this consolidation. Mark on APPN.
APPN. All right.
I
what does
actually
this
like
company
that.
do?
I like that as a stock trade too.
I'm not familiar with this company.
Neither am I. I don't know. They make toilet paper. It's just got a good chart, Marky.
You would think marketing Mark. Is that a name? Marketing Mark. You would think that like toilet paper, they would put like the emblem on each sheet, right? So as you're rolling, you would see the name. You would think it's just wasted space, isn't it? Just want to throw that out there.
That's how Gino's brain works, everyone. It's like, how do I make an extra buck?
There you go.
But that's the trader. Traders always
Let's
trying
not
to make
put my face on the toilet paper. Let's not do that, okay?
Okay, Tyler, explain the psychology of that little trend line, that short-term trend line. Like if it gets broke, because that's your trigger into the trade. And explain why it's the trigger into the trade.
I want some indication that this is pivoting from consolidating to trending again, right? So when you think about the nature of trends, you have an expansion or an upswing, and then you have compression or a contraction or a pause, right? We run, we pause, we run, we pause. This thing ran a ton. It's now pausing. I want some confirmation that it's going to be done pausing and ready to run again. And so if you look at what has defined the price action during the consolidation, this little descending trend line has been resistance. As this thing has tried to get back to trending higher, this trend line, it rejected the price here, rejected it here. This line just is a good line in the sand, a good indicator of where sellers have shown up throughout this entire consolidation. So Mark, I don't want to buy it unless it can finally blast through that. So yeah, I like that as a trigger, 150, maybe a little bit higher, 155 if you want. This is a big moving stock. The ATR is probably huge, but yeah, that's the thought process, Mark. I want to take out that trend line.
No, and the thing about it is, on a stock like this, that maybe some people with some smaller trading counts, if you get that signal, you can buy 10 shares. And on these hot momentum stocks, that can move. I mean, 10 shares can, go from 150 to 160 to 170, and it doesn't represent it represents a really good return. So you don't have to always buy in 100 share blocks, just a note of information. All right. That felt like some Billy Joel to me. Not quite Prince, the Palantir, feels like some Billy Joel, but I don't know the company, and I always got to know what I'm trading. And I'm just feeling like, listening to some 70s Billy Joel that I'm not that familiar with right now.
Wow, we're talking about Prince to Billy Joel. Wow.
Though it's hard when you start, and my cat is just like wanting to live on YouTube tonight. So
your cat's probably trying to escape with your playlist going.
You started with Palantir. That's you're not going to get me more excited than Palantir. I think it's going to be hard. That's hard. Gino, you're up next.
Yeah, I got so many fun picks, but I'm gonna stick with some big names, Mark. Let's go with Texas Instruments. This is a swing low I've been looking at here. We had a big discussion on this. Texas Instruments, big name. It's been around for a long, long time. It is one of your first pioneers of the tech industry. I like this textbook swing low here, the trigger above today's candle. Again, I could come in here with the calendar or just a long call. And I think, Mark, you're probably thinking about naked puts, right? Is that what you're thinking here?
Well, I'm looking at the weekly chart. We pull up the weekly, and you don't have the 9 up there yet. But one of the things I like about Texas Instrument recent trend, you do have the 9 up there. Look at that. Look at that.
Mm-hmm.
Look how it has now for what? Half a year lived on that weekly 9.
Yeah, I like that.
That's pretty consistent, right? And so like anytime there's been a pullback to that 9 and then you found a new entry opportunity, it's treated you pretty well.
Yeah. So again, one of my things, Mark, is I manage bigger accounts. I have to have liquidity in the options. So the first thing I do is I scan the stocks, and basically it's the S&P 100, NASDAQ 100. They're very liquid options. But this is one of those that pops up a lot. Texas Instrument, Microsoft, AMD, a couple of those big names, Apple, of course, they pop up a lot. So as far as options, it makes it easy to find a strategy. So once again, pick your strategy, right? You can do it as a stock trade, of course, a position trade, an investment. It's a fun swing trade. Again, it's got a decent ATR. What's the current ATR on Texas Instruments? I'm looking at my screen. I got 2.8. I'm a swing trader. When I swing trade, one of my filters, it's got to have at least a 1.5 ATR. So this one almost always does. So that way, if I do want to do a short-term swing trade, I know I'm going to get a 1.5 ATR bigger. This is almost double that. And I like the risk reward most of all, Mark. If you look at the risk reward on this, you nailed it with the 9. Is that a 9?
No, that's a 20. The daily show. That's the daily chart.
Okay, daily chart. So underneath there, your risk, you can put your target, my target at 170-ish, and it gives me a nice risk reward. Trying to make
enter in above the little 5-day consolidation resistance, target in the 170-ish range, which would be along the moves. Put a stop underneath that recent support.
Yeah, and if you don't trigger in, no big deal.
Pretty
now, as far as a position,
it's pretty classic. What do you think about that, Tyler? It's a pretty classic swing trade, right?
Yeah, if you want a larger cap, kind of nice, slow and steady, nice trending stock, I don't mind it at all. Semiconductors have been hot. It's a good little pattern, and I like how like a bull call diagonal would pay you even if it doesn't rip higher, right? If you did a strategy like that, even if it consolidates, you're getting some good time decay. So
that's true.
Well done, Gino.
All right, you're up next, Tyler.
All right, look, I'm going to go back to the well in this momentum thing until Mark likes it. Mark, all right, CRSR, newer company. I have no idea what they do. Gaming, I think. But check this out. Look, it went from $14 to 51.
Ooh.
With very nice technicals along the way. Good little trend.
Mm-hmm.
I now have a 20 and 50-day moving average, so I've got enough history behind it to give me some pivots and trends to trade off of.
Yeah.
Look, this thing was nuts. It went from 28 to 51 in one upswing, finally came back down to earth. But I must tell you, I like how this is settling in. You got a little bit of slowing momentum / almost a double bottom here. And I think this breaks out and it goes higher. I like this. I like this bottoming action. I like this settling in. I like buying it over the 20 MA as a swing trade. Probably wouldn't fiddle with options. It's volatile enough where stock trades will get you done. But stop the pivot low, take it over the 20. This thing runs back to 50. I think you've got a nice little risk reward trade there.
Yeah, you know what I see there, Tyler? A classic pattern, a W. You can see the W. It's a really sharp. If that pans out, it puts your target at 51.30 again. But also, as it breaks that moving average, it's actually a double top of the W, the middle of the W, and the moving average. That's basically a double top break. So I actually like that as a breakout scalp play on an option. Good job, man.
What's my margin on the $35 20? Okay, so on the 25 strike in January, I'm getting $35. What's my return on investment on that?
And ROI is going to be 36 on 250.
All right,
so about 15%.
It's all right. I've yeah, it's not as sexy as Palantir. My problem is I led with the very best.
I like it, and look how liquid the option. I mean, this is one of the things that I love about 2020. How quickly option chains become liquid on some of these popular. The fact that option chain is that liquid, a signal that you get. And where's your signal here? Because I'm really interested in this one.
Right above the middle W for me.
Yeah, for me, I mean, I think you could take it over today's high if you want an anticipatory entry, but the safer one's taking out that pivot that Gino's talking about, 38.50 or so.
I don't see any resistance until maybe 42.5.
Yeah,
I like a close above that a lot. I like this one a lot. Like this is some, I've had a few drinks on a Friday night in the piano bar, breaks out some AC/DC, to liven up the joint, because, and he wants to, I like this one a lot. I like the cash flow down below at 25 too, starting at cost average down on this company. And I am familiar with this company, and I like that setup a lot. I like that a lot. Got a lot of momentum going on tonight.
Yeah.
I'll switch it up here on this next one, but
all right, Gino, you're up next.
Okay, let me pick a breakout play, man. You're doing all these fun breakout plays. Let me pick one. Okay, let's try Sony, SNE. What's going on with Sony?
Ooh.
Now, this company, international company, you've heard of it, right? I like this possible breakout here with an in-the-money call with a 60 delta. And for me, this would be a short-term breakout play. This consolidation pattern is what we call a bullish triangle. Again, market's above that nine moving average, if you have that in there. I don't know if you have that on your.
I do. Let me grab it.
It's all right. Yeah, you use the 10, whatever. But this breakout here, there's a saying: a company triggers 90, it goes to 100. So we got a good $5 left in this puppy, and it triggered on 90 above the last triangle. The last triangle you can see back last month. We call this like a flag or a basing pattern. And there you go. You got it, Tyler. Tyler's got it. So it broke out. And I think there's room for more running here. And again, simple option trade for me. And also, Mark, if you're looking at it for options, the volatility is not high on it. That's why I would buy options. The volatility, we're looking at IV rank of 9. It's only been lower than this, the IV, 14% of the time of this year. So it's running about a 27 IV, which is low for this. So you want to buy options on this strategy. This is a buying options. So take advantage of buying versus a credit.
I mean, that's pretty clean. And when we use the term clean in amongst traders, like the entry level, the exit level, the line in the sand in which we get in and out of trades, it's pretty clean.
Yeah, they're pretty liquid options.
What about you, Tyler? How would you play this?
I love the analysis. The IV is super low, so this would definitely be a long premium play for me. If the long calls are too expensive, bull call vertical.
Yeah.
Buy the 95, sell the 100 out to January, something like that. I think would be a good little play.
I like the risk reward too. The risk reward, look how tight it is.
It's clean. It's really pretty. I like the setup a lot.
It's pretty.
All right, I like it, Gino. I like that one a lot. Tyler, you're up next.
All right, I did an article on Amazon. The reality is the Microsoft kind of spilled the beans all these tech stocks, Apple, they're all waking up. But I did an article on Monday on Amazon, and I think somebody actually brought this up in one of the lounges. But anyways, the article was on the Tales of a Technician blog about the triangle pattern in Amazon, and it's starting to wake up a little bit alongside the rest of the tech sector. And I think that this is a decent little play here. So one of the things I talked about in the article was when you look at price cycles, you go from bull to bear to bull to bear. Just as price moves in cycles, so too does volatility. So where you go from a volatility expansion or a big move, and then you rotate into a volatility compression or consolidation where the market pauses. And for people that use indicators like Bollinger Bands, you're looking for situations where those Bollinger Bands squeeze together, where basically it's too quiet, right? It's too quiet. This has been too neutral and it's ready to wake up. Oftentimes when you have a triangle pattern, that happens as you approach the apex of the triangle. And I like the volume coming in today. I like this green bar. I think there's a decent chance you get some upside follow through on this. So I'm looking for Amazon to continue running and maybe go back and eventually retest its high up here near 35.50. From a strategy perspective, the IV rank isn't terribly low. It's 36th percentile, so it's not a slam dunk long premium or short premium play. I think you could take your pick here. So bull puts work. If you want to go more directional, I think out of the money bull calls, out of the money call butterflies, something like that might work with Amazon.
I mean, that is, and I read the article. I think it's beautiful analysis. I think it is a beautiful situation, especially for those bull put potentials.
Yeah,
I like the bull put on the signal, on the break, and the aggressive play too. I think both are in play, and that doesn't always happen, right? Where you're like, I like the bull puts and I like those out of the money bull calls. I do like and why I like the out of the money bull call that you just recommended rather than an at the money bull call. Why are you recommending that? And
sure. So a couple of reasons why I think the out of the money bull call is interesting. Number one, they're cheap. So if you want a cheaper trade where you don't have to put up a lot of capital, it's very attractive. Number two, the risk reward is great. Like you can build a $10 bull call vertical on this for $3 where you're risking 3 to make 7. So it gives you a pretty good risk reward when you do that. It also enables you to you can decide how far out of the money you want to go, and you can really control the cost in Amazon. There's a million strikes to choose from. I mean, if you really want to make this a speculative play, go buy a 3,400 call, sell a 3,410 for $2 or something. You're risking 2 to make 8 if it ends up getting up there. I just like the amount of control you have in tailoring the trade cost to exactly what you want. The stock moves $60 a day. It can hit 3,400 in a couple of days. I wouldn't do a 2-day trade, but all I'm saying is it moves enough to where I'm not concerned that it won't go up to justify buying that out of the money bull call, I guess.
no, I like all kinds of strategies here. All right, Gino. I mean, listen, this has been you got a tough opponent tonight. He's playing some sweet music to my ears. But you came in strong with Sony last time. What do you got for us this time?
Do you want a breakout or do you want a conservative?
I want some Bon Jovi. Give me something that, it's my life. I want to hear it's my life in my head when you give me this trade setup. So fire me up.
Okay, I'm going to pick your favorite shoe company then. I'm going to pick Crocs. And
listen, those shoes are ugly as can be, but this thing's been a moneymaker for 7-8 months. So
yeah, so we're double topping here. I like today's, and I wanted today to be an indecision candle. Why? Because it's rallied the last 3 days off a swing. I wanted to see resistance hit at 66.5. Why? Because that's the trigger above that. Again, long call. IV rank is low on this company. And these options do get pricey. This IV rank, the IV percentile, 30% of the time it's lower than this. It's only 16 IV rank, but the IV is actually 57. It's been, I don't know, what was it at the beginning of the year, Mark? $8, and now it's 66. It's on fire. For me, it's a short-term play because I remember back in the day when Crocs did well and they turned around and nosedived. This is one of those things, for me, I got to be careful in the retail space. So for one of those fun names, fun plays, long calls, it's not expensive because it's a $65 stock. Again, classical swing trade. And it's
all right. You're going to have to talk me out of this thing, because this is my concern. When I look at that chart, and I like stocks' personalities. I like when they break out, and they consistently do that. Breakouts of resistance areas haven't moved a lot.
Yeah,
it's moved a lot the last time.
Yeah, it's had some good.
Alleviate my concern.
But I'm not seeing a really good double top breakout there recently. Do you?
But I mean, it's been a consistent grindy trend.
Yeah.
But it hasn't been explosive. So how do I play this?
Me, it's a long call. It's long call, 60 delta. Again, diagonal candles work on this too. And it's not a credit spread. It's not a credit spread for me. It's not a naked put. It's a mover. It's trending. And this has been a long, steady trend. Nothing's holding it back. Like you, Mark, I do not like the shoes, to tell you the truth. Not a fan of the product.
I have no idea how any human being likes those shoes.
But I'll tell you what, I was at the mall this weekend and they have now added some kind of fluffy sock material inside of them.
That's great. They're still ugly as can be.
So they're kind of turned into
so they're now ugly fluffy.
I just wanted to throw that one out there.
What do you do here, Tyler? Because we see the trend is so consistent. It's such a grindy. How do you play this?
Look, I mean, you definitely got to buy premium because the options are quite cheap. So your risk reward for selling puts just isn't that great. Honestly, a slow grinder like this, I would do like a Boar Boys covered call.
It works. Diagonal counter works.
Yeah, bull call diagonal. Yeah, same thing that Gino said. I mean, I don't know. I don't know that I'd want to do a bull call vertical. It's a little more directional. I think that I would do a bull call diagonal. And if I didn't want to go long term, I wouldn't buy a 4-month call and sell a 1 month against it. I'd maybe buy a 2-month in the money call, sell a 1 month out of the money against it. Then I got a shorter time frame and I can reassess.
I like that a lot.
Yeah.
I like that a lot. I like the shorter play. Build this trade for me real quick. Let's just go see what it has. It doesn't have February's. I was worried about that. Now it will have February's on Monday.
Yep.
Yes.
Because
and quite frankly, it's probably, I mean, unless you're just screwed, it's probably not going to go crazy in the next 2 days anyway. So maybe you say, hey, settle Crocs. Let me revisit you on Monday if you really don't want to buy the March option.
All right.
I'm going back to something that I know will speak to Mark. Let's follow in the footsteps of Palantir, and I'll go with NEO here. Virtually the same analysis in the sense that it is a hot momentum stock that has pulled back / paused like Palantir. And I like the support that's coming in around $40. We've hit that now multiple times. People love this stock. Momentum traders freaking love NEO.
Barron's put it on the cover saying this is overvalued. You should sell. They dumped ton of shares on American market, diluting the shares, and it doesn't matter. People love this stock. And until they stop loving it, there's trading opportunities.
Well, and that's why you got to use the stop loss, right? So I think this starts to look ominous if it breaks the 50-day moving average. It looks a little bit uglier, but the premiums are juicy on this. I mean, Palantir had an implied volatility of 116 or 106 or whatever it was. This has an IV of 116. So you're getting similar premiums in the options. NEO's slightly more expensive, but I like the fact that it dropped $20 off the highs. Kind of took some of the froth out of it. You take a look at the Jan, maybe sell a 1 month out of the money. I mean, look at this. This is freaking ridiculous. Look at how many strike prices have over 50 cents of premium. Mm-hmm. You're talking like 13 of them, 13. The reason I'm anchoring on 40, 50 cents is because that's probably the minimum of what I'd want, but you're getting that down at a 7 delta, right? So I'll sell a 30 delta or a 30 strike put, about $15 out of the money. I get $50 a premium, and I'm making about a 20% return almost. I feel like that's pretty good by naked put standards, being down.
Good. That's a good naked put, right?
Well, and I like that $30 level because for a couple reasons. One is that old breakout level. Will you highlight the time period that at the mid-October when you had that little pullback? We had NEO on our stock and options report. If you're watching this the first time, Tackle Trading, we put out stock and option reports every weekend. We had NEO as a play that weekend. Little pullback, caught momentum stock, caught it. It was really, really nice move after that. If you are not a member of Tackle Trading, you can come see what we're all about. Go to the store tab, sign up for a 15-day free trial, or you can email me at team@tackletrading.com. No, so I like it. It's near that old breakout level. I mean, when you've had success with a company, Tyler, have you played this one personally?
Yeah, I've done naked puts on this before.
Yeah, so have I. And when you've had success, man, it's easy to keep going back to the well. Another reason I like NEO a lot on those $30 or $32 options, we pull up the weekly chart. I love selling naked puts on stocks that I'm willing to own, especially with a cost average down plan. And I like targeting that 20 weekly.
Yeah.
And so like in the next 3-4 weeks, that 20 weekly, which has not been tested in 6 months. So it's been a long time since it was tested. We already have a share dilution out of the way this last week. So that's not going to happen again. It's a stock I'm willing to own, but that 20 weekly is probably going to act as a big, huge support buffer. And so, in a couple weeks, it's going to be at $32, $33. So those low 30, mid 30 naked puts that, as Tyler pointed out, you can get a ton of premium for. Just got to be willing to take ownership. And this is not your grandma and grandpa's stock. This thing's a mover. Hey, it's 2020. There's a lot of things that are not conventional anymore, but I like it a lot. I will do it. NEO's treated me very well, as it has many other people out there. All right, love it. Tyler, this isn't fair. It's like you looked at my little watch list of all the stuff I like these days.
I'm in your head, man. I know what's going on.
High volatility premiums. Love it.
All right, Gino, you're up next.
Mark mentioned something very important is if you like these setups, there's another half dozen of us that get our heads together and pick these stocks every week. It's called the option stock report. We already advertised that, but I'm going to pull one off there that's recently on there, and it hasn't triggered quite yet. It's on our watch list. We have over a dozen. Half of them triggered. I'm going to put in Yandex, YNDX. YNDX is on our options report, and this is what we call a typical breakout play. And what I like about Yandex is the setup. This is our options report from tackletrading.com. I love this triple top, and actually a quadruple kind of, but the most recent triple top, today's volume bar going into this. If you expand your volume, you see the volume running up into here. I like this. This means this green candle has buyers stepping in, coming off again, Mark, off a 10-day moving average as support. I love momentum plays that stay above the 10. If this breaks 71.05, I'm targeting a good ATR, which is almost $2. So for an option play, I really like this trade because, again, when I filter for these breakouts, I want cheap options. And this option, the options have only been cheaper 14% of the time this last year. It's got an IV rank of 14. Its IV is currently 37, which is dirt cheap options for this company. So a breakout on this, a $2 move, is easy money on an option. And that, again, is on our options report.
You're muted, Mark.
I was coughing there. Both Sony and Yandex. All right, break the tie, because I want to play one of these.
Wait. Now that's the hard one. That's a hard one.
I want to play one of these, but not both of these, Tyler, because they're both similar. They're not like good big movers.
Yeah.
I like both of the setups. one of the reasons I like YNDX so much is, I mean, you had this huge move off the March lows, right?
Yeah.
And then it consolidated, and it had this really wide consolidation pattern for 1, 2, 3, 4, almost 5 months. And now it's consolidating at the top of that, a break out of that. So it's breaking out of a short-term consolidation pattern and essentially breaking out of a longer-term consolidation pattern. And I like that 1-2 setup there. That's treated me well as a pattern before. But I like the Sony setup too. Tyler, break the tie for me.
Same chart, right?
They're pretty close. I mean, I'd probably go Sony.
All
Just
right,
because
so
it's a
I'm
bigger
definitely going
company.
Yandex now. So, like, I just wanted to
Fair
make
enough.
sure, you know. So you were going to break the tie. You didn't know how you were going to break the tie.
For the
But,
big company, I do like Sony.
They're both pretty. I like them
Yeah.
both.
For me, they're both cheap options. I always go for the bigger ATR, and it's a cheaper stock on Yandex. So it's a cheaper stock, which makes the options cheaper. And it's got a bigger ATR, which gives you more profit on your target. So as far as hitting a profit, you're going to get more profit on the Yandex.
And this goes down to like portfolio and trade portfolio design, because listen, I like messing around with a little Palantir and a little Neo here and there, but I like slower burner setups too. Like everything can't be a gigantic volatility party. So I like choosing one of those for the two. All right, we're going to have one more for each of us. One more quick one. Tyler, what's your last one for us?
I'll go. I got to go Shopify.
I had that on my list too, man.
I know we hit this in the halftime report, but look, it's just really pretty. It based for 5 months. It's been a hot momentum stock with e-commerce and all of that jazz. It's in that space, but it's a really good breakout, Mark. This went higher from where we mentioned it. It's a clean break, and look at its history. Look at the previous times you've broken above weekly resistance levels. Yeah. It's got a really good history of having upside follow through when you take out weekly resistance. I see no reason why we second guess this. I like this as a breakout. Now, from a strategy selection perspective, it's got lower IV right now. I mean, it used to be kind of crazy, and it's settled down a little bit. So bull call spreads
I
for
love
me.
bull calls. I was thinking to say, listen, this is the best chart setup of the night, and this is the reason why. I don't know if you saved it for last on reason. Listen, Shopify is a hugely popular trading company that just took 5 months off, right? Like this, if you never heard of Shopify before, this thing is a trader's darling. But things can't go up 1,000% every month. Sometimes even the most popular companies trading take some time off. It took basically the last half of the year off. It is a sexy name. It is a popular stock, and it just broke out of 6-month consolidation. Love bull calls. That is the trade setup of the night, unless Gino can beat that with his next one.
Well, Mark, I'm going to go for a slow, low grinder that you liked, but let me just check here. Do you want a fun stock or a big name slow-mo?
You can't ask the judge. You can't ask the judge what he likes. Just have confidence, Gino, and pick the dang stock.
Okay, which one did we not do? I'm going to go with Taiwan Semiconductor. I have to go to my 5G list. This thing has been a hot flying. It's already doubled this year. I'm looking for the trigger above yesterday's candle, and this thing moves. It's got a $3 ATR, and Taiwan Semiconductor was one of the coach's favorites as a group, like going in Friday. It still is. It's between this one and On Semiconductor and AMD. They're all very similar. So AMD already made its move. I'm hoping that Taiwan Semiconductor falls in its footsteps.
How do I play it?
Yeah, what do you think is strategy?
So that's your long call. That's your long call.
Give me a weekly chart, because I mean, once again, a lot of these, man, that is. Where do you enter?
You enter above the last resistance. If I'm looking at the daily chart, I would probably say I like yesterday's high. That was a test of the breakout. It failed. And yesterday's high actually goes back to about a week ago. There was a same resistance point. It's consolidating. We call this letting it cook. And I would like it to break right above 106.5, my entry point.
All right. All right. A fine setup. That trend's been, I would like it to cook a little bit more like it did in July and August, but that's a personal preference. I'm really, really conservative on that stuff. But listen, the company's been hot. I got no problem with it all. All right, listen, I'm going to just tell you the ones I'm doing tomorrow. Y'all can do whatever you want.
Let me see.
I'm going to look tomorrow. I do like bull call spreads on Shopify. I'm sorry, when you get a company that big, that popular, and you break out a 5-6 month consolidation. I mean, listen, anything can go wrong, right? Trading isn't an exact science, but man, I like a gamble there on a bull call spread. My only question on this, Tyler, where do I do the bull call spread? Like if I wanted a cheap risk where I get like a good 50-50 or 60-40 in my favor risk reward.
Yeah, I mean, well, look, so I want to be within like an ATR or two. I don't want to be, so $50, $50 ATR, anywhere between here and 1,200. I mean, I think you could go out and using Jan's going to be more aggressive. Feb is more conservative. So you take your pick there, but I'll use Jan. You go buy the Jan 1,200. You sell let's start with a $10 wide. You sell the 1210, paying $275 for a $10 spread.
I'm sorry. I'm willing to lose a couple $100 on that play every time because I like it. I like it a lot. No, I like that one a lot. I love Palantir on a cost average down plan on naked puts, but that's not even fair because that's just cheating. Gino, I like some kind of diagonal a lot on Microsoft, something to take advantage. If tech remains stuck in the mud, at least you're bleeding off. It does seem to be awakening. So whether it's Microsoft or Amazon on that, pick one, but you want to play both, right?
Amazon, you got to be good with the options.
Would you pick one or the other? Or
do half and half. I mean, instead of two contracts on one, do one on one on the other. I just recognize they are highly correlated is a good point.
Like Yandex, I like a pick of either CR, SR, or NEO. Can't do all the volatilities, right? And Crocs, their shoes are too ugly. I can't. I got to meet one person in life that tells me why they love Crocs shoes. I got to understand. I'm sorry. I'm an old, simple man. I'm old. So, hey, listen, this is great stuff. I had my notepad out tonight because I love it when experienced people with multi-decades of combined experience are bringing me analysis, because then I can sit back tonight and I can be like, okay, let me think through this. What do I want to do? And you do my work for me. You do other people's work. It gives me trade ideas. Now, if I do any of them or not, that's on me, right? It's not on you. You're just bringing me ideas. And then as a trader, I can make my decisions on what I want to do. Thank you for your time. Thank you for your research. Any final thoughts before we call it a night?
Look, this game is easy because of the market we're in right now, right? I mean, if we played this in March, it'd have been crickets. So enjoy it while it lasts, but dang, it is not hard to find good bull patterns right now.
No. My final thought is if you're having trouble finding these picks, show up to these shows. But honestly, we go through hundreds of these every week and we put them on a list of our favorite patterns. And it's hard. This last couple of weeks, it's hard to pick our favorites because just in the semiconductors alone, just in my 5G list, just in our, Shopify and communications list, that kind of stuff. There's so many picks. We actually break down the risk reward and make a list of a couple of dozen and put it on our stock and options report. So if you haven't seen it, check it out. And if you see a pattern you like better, let us know. We'll put it on there too. So definitely check out our stock and options report if you have not. No,
I love it. And you can check out our stock or options report. Go to the store tab. You can sign up for a pro membership, or you can sign up for a free trial, see if this is all for you, or you can email me at team@tackletrading at any time, and I answer those emails, and I'll get you set up, and I'll answer any other questions you want. Gentlemen, thank you. Everyone else, thank you. And if you're watching on this replay, thank you for watching on replay. We love you all. Our community is the best. We truly, truly do appreciate